Coming up on Business Incorporated. World Bank approves $350 million loan to support Morocco's Blue Economy program. And Egypt set to list 10 of its largest state-owned companies on the stock exchange and commence sale of others. Plus, in Kenya, salaries and wages paid to public servants shoots up 34.17 billion shillings over the past year, despite a 3-year freeze in hiring. Hello, welcome to the program. I'm Ladi Williams. First off, let's look at how your money is performing at intraday. Trading on the African continent kicked off the midweek on a negative note. Nigeria's main index still in the red after yesterday's big drop. It's down about 0.38% and still below the 52,000 point level, while South Africa's benchmark index dropped over 0.5%. Elsewhere, Egypt's index also traded lower by 0.63%, while the Nairobi Stock Exchange closed Tuesday negative, down 0.56%. And to the Middle East now, where sentiments were mostly positive, with the Qatar index the sole loser. The Abu Dhabi index fired on in the green, up 0.53%. Also, Dubai added 0.12%, still within the region. Saudi Arabia's index jumped by 2.48%. Quite a big jump there at intraday, while the Qatari index dropped by 0.12%. And now moving over to Europe, now we see energy security has become an even more pressing issue. With the war in Ukraine and the spike in prices it's triggered. At the same time, lobby groups are warning to not let climate protection ambitions fall to the wayside. Well, we have Chris Koba right there in Berlin. Great to have you, Chris. Well, the G7 Environment, Climate and Energy Ministers are meeting in Berlin today, talks beginning in the evening. Which topic is dominating the agenda?
The challenge will be to find a middle path between energy security and climate protection. And Germany in particular is facing a dilemma here. The country's economy and climate protection minister, Robert Habeck, is pursuing 3 goals, which are all very unlikely to be all fulfilled at the same time. First, the country wants to become independent from Russian oil and gas deliveries, while at the same time, and that is the second objective, provide energy security to its citizens and economy, and objective number 3, decrease carbon emissions and their harmful impact to the planet's climate. So it is quite a circle that leaders from the US, Canada, France, Britain, Italy, and Japan are trying to square here under the German G7 presidency, not least because environmental groups have been pushing for a faster transition away from fossil fuels. The lobby group Germanwatch setting up 3 specific demands that G7 countries needed to agree on in their meeting: end coal power generation by 2030, end oil and gas power generation by 2035, and also end the use of combustion engines in cars by 2035. Providing energy security at an affordable cost has become a particularly important issue for European countries with their ambition to wean themselves off of Russian fossil fuel deliveries that have for decades been providing energy to people and businesses in Europe. And looking at the construction of terminals for liquefied natural gas that Germany has commissioned, some environmentalists are saying the intent to turn away from Russian oil and gas must not lead to the construction of new permanent infrastructure for fossil fuels.
Quite interesting, Chris, but, climate protection sounds like an idea that many states could actually, gather behind. But what are the potential friction lines?
The use of coal certainly is such a hot button issue globally. Obviously, many are focusing on countries like China or India that have many coal power plants running and who objected to quitting their use at last year's climate summit in Glasgow. Instead, the final communique only spoke of a gradual reduction of the use of coal power plants. Now, whether G7 countries can now agree on ending the use of coal is a big question. So far, Japan in particular has been reluctant to commit to something like that. And with an EU embargo of Russian coal in place and one for Russian oil looming, Germany also has been more reliant on burning coal again. Among other topics, there's also the question whether industrialized nations are to bear the costs of the damage that climate change is causing in less developed regions of the world. At last week's meeting of G7 development ministers, there has been some progress, but a specific commitment is so far lacking.
Right. Well, the dirtier alternative, that's coal. But major markets took a big hit yesterday. Amid sell-off in shares of social media companies. What does today's picture look like?
The seesawing on financial markets continues. After Tuesday's sell-off, European shares rose on Wednesday with positive data from Germany, lifting sentiment there. Data from the German Statistics Office showed that Europe's biggest economy grew in the first quarter, underpinning initial estimates. After a hawkish tone from European Central Bank Chief Christine Lagarde earlier this week, investors will be watching for minutes of the U.S. Federal Reserve's previous meeting later today to assess the thinking of policymakers. Last week, Fed Chief Jerome Powell said the U.S. Central Bank wanted to see economic growth slowing and, quote, clear evidence of inflation decelerating before it pulls back on efforts to slow the economy. Mr. Powell also told the public that in trying to dial down inflation to 2%, that would involve, quote, some pain. So far, though, German stocks are staging another recovery attempt, with the DAX gaining around 0.7% in the early hours of trading.
All right. Thanks so much. That's Chris Koba right there in Berlin. Always great to talk to you, Chris. All right, now let's head on to the UK. We have Juliana standing by right there. Well, Juliana, let's talk fashion. We see Marks & Spencer's to shut about 32 more stores as it shifts away from town centers, saying many have lost impetus. What are you hearing about this?
Yeah, good afternoon, Laddie. A mixed picture of results from M&S, which is a famed British retailer selling everything from fashion to food. They've had a pretty tumultuous couple of years, especially before the pandemic. They were demoted from the FTSE 100 to the domestically focused FTSE 250, but they did appear to find their footing because a lot of their sales went online. They had a rough 2021, but in the financial year that's just come to an end, they have posted a return to profit. So operating profits came in at about 330 million, which wiped off their losses. However, bosses have spoken about headwinds on the horizon. Of course, this is all about the cost of living crisis and consumer confidence. Are people, when they're struggling to put food on the table, going to be going out to buy new office wear? I certainly am not, and bosses at M&S don't think people are going to be doing that. They also announced their full exit from Russia, along with a slew of other companies that have been doing it since the invasion a couple of months ago. This is going to affect the franchise, which is owned by a big Turkish firm. I believe they had about 30 stores in Russia, employing about 1,200 people. Those jobs are gone and those stores will be closed permanently. And as you said, they are starting to move out of some of these areas that are pretty deprived in the UK. We know that the British High Street has been struggling over the past couple of years. The pandemic has accelerated that struggle, and they want to focus more online, which is why these operating profits that they posted early this morning have been boosted by that online trade.
Quite interesting. And talking about Chelsea, the sale has been given approval by the UK government following the proposed takeover by the Todd Boehly Clearlake Consortium. How's this being perceived over there?
Yeah, well, the Roman Abramovich era is officially over, quite timely as well, this final sale of Chelsea Football Club, because if I'm right, the Premier League did come to a pretty dramatic end over the weekend. I think Blues fans are pretty happy that this saga is over. Nobody knew what was going to happen to Chelsea after the British government imposed sanctions on Roman Abramovich due to his links to Russian President Vladimir Putin and the Kremlin. There was a big scurry for who was going to take over Stamford Bridge. And finally, the winning bid came from Ted Bowie, a consortium led by him. He is a part owner of the LA Dodgers, so clearly he has an eye for sports, and hopefully it will be enough. I think there are some concerns already on social media. A lot of people are talking about the small amount that Chelsea will have in the transfer window of £200 million in football terms. I'm not sure that's enough money. But I think, yes, fans have breathed a sigh of relief because, again, we weren't sure what was going to happen to Chelsea. It's been sold for £4.25 million. Apparently, £2.5 million of that money is going to go towards humanitarian aid in support of Ukraine. But I think for the Blues, they're just happy that this season is over, and hopefully they'll do better than the third place I think they came. Laddie, I have no idea. I'm not really a big football fan, unless it involves Manchester United.
Well, I'm a Man U fan myself, but yeah, we'll see how all of that plays out. All right,
so we did too well, did we?
No, we didn't. No, it's really bad. But yeah, it was good to have Ronaldo back, though. So how are the markets looking?
Yeah, wonderful. The markets are in good shape. Good shape at intraday. Domestically, I think lots of people now focusing on a statement that we are expecting to get possibly tomorrow from the Chancellor, just lining out what the Treasury is going to do to help support people who are struggling with the cost of living crisis. We are going to be talking about that for months and months to come because, unfortunately, it is going to get worse. But the FTSE All-Share at intraday is up by 0.47%. The FTSE 100 up by 0.61%. And the FTSE 250 is up by 0.25%. In the currencies market, the British pound is currently trading down against the US dollar by 0.36%, though it's up against the euro by 0.27%, but down against the Japanese yen at intraday by 0.03%, Laddie.
All right, Juliana, thank you so much. Always great to talk to you. See you tomorrow.
Yes, bye, Meg.
All right, now, so African leaders attending the Africa Development Bank's 57th annual meeting have called for the allocation of special drawing rights to the bank to support Africa's growth. Speaking at the opening ceremony in Accra, the Ghanaian and Tanzanian president both called for the AFDB to be at the forefront in developing the continent as it grapples with a number of challenges. So take a listen.
African presidents, finance ministers, central bank governors, policymakers and other participants gather in Accra's International Conference Center for the African Development Bank's 57th annual meetings.
With our board of governors,
in his opening remarks, the AFDB president, Dr. Akinwumi Adesina, says Africa has no other choice but to adapt to climate change.
We will build a much stronger Africa, a climate-resilient Africa, an Africa with energy security for all. Africa has no choice but to adapt to climate change that it did not cause. To support the continent in doing so, the African Development Bank has doubled its financing for climate to $25 billion by 2025.
Also taken to the stage, Host President Nana Akufo-Addo makes the case for the African Development Bank to handle the special drawing rights for the continent and for the bank to take a more prominent role.
The strategic decision to make the AFDB the delivery vehicle for these SDRs must be pursued and achieved. Leveraging the SDRs 4 times as AFDB does will significantly boost resources for Africa's transformation. We must activate a process that moves this bank from the corridors of billions to trillions given the scale of the challenges on this continent.
Participating in a presidential dialogue on Africa's development challenges and opportunities, Tanzanian President Samia Suluhu Hassan also calls for special drawing rights to be allocated to multilateral development banks such as the AFDB.
We have to raise our voice, asking the multilateral financiers to allow FDB to access to SDRs, because those are going to benefit Africa. We'll be close to get fund from our own bank for our own development.
Over the next few days, discussions at the African Development Bank's annual meetings will also cover a range of other topics, including green jobs for youth and women, as well as building resilient rural economies for a food-secure and prosperous Africa. From Accra, Ghana, Teniola Shobowale for Channels Television News.
All right, so after the break, we'll take a look at U.S. markets. That's in a moment. Do stay with us. This is Business Incorporated. Welcome back now to the U.S. U.S. stock futures rose early today after the Nasdaq Composite dropped during the regular session following a warning of slowing growth from social media company Snap that hurt the tech-heavy index. Dow Jones Industrial Average futures rose 51 points. The S&P 500 and Nasdaq 100 climbed 0.20 and 0.13% respectively. Well, we have Maria Bird with details of yesterday's close. So take a listen.
The U.S. stock market ended mostly lower on Tuesday, as the S&P 500 was down by 0.81%. The Nasdaq heavy tech industry was down by 2.34%, major sell-offs in the tech industry. And the Dow Jones was up just slightly at 0.15%. The sell-offs continued on Tuesday, as many investors are unclear of the stability of the U.S. economy and the increase in inflation, and also the rising interest rates. It is also clear that the Federal Reserve Bank will not allow U.S. investors to accept debt payments from Russia. This will cause an increase in the debt default for foreign debt for Russia. We will continue to watch to see how the U.S. economy will fare over the coming days.
How's Maria Bird with yesterday's close? Well, to our next conversation. Now, much of sub-Saharan Africa's farmland is cultivated with a hand hoe, and agricultural processing, transport are often done manually. This limits the potential of agriculture in the region. With the war in Ukraine, global food security is a big concern now, with the risk of a global food shortage. It's been said that mechanization can help to alleviate food shortages and enhance agricultural development. Well, for more, we have Rispa Maliza, Digital Sales and Partnerships Lead at Hello Tractor, joining us on the show today. Great to have you.
Great to join you, sir.
Yeah, great to have you join us. Well, from your experience, what is the status of agricultural, mechanization in Africa right now?
So the status of agricultural mechanization in Africa is quite low, and this can be attributed to the fact that a majority of those practicing agriculture in Africa are, smallholder farmers, close to more than 2 million smallholder farmers in Africa. And the very few access to tractors to be able to cater to those smallholder farmers in Africa. We have a number of issues such as connectivity issues in the continent as well. Some regions experiencing better or higher levels of connectivity, other regions not getting as much as connectivity as they should, which creates such an issue when it comes to the farmers requesting for tractor services. So as Hello Tractor, we're trying to be able to see if we can provide a platform that can allow those smallholder farmers the ability to request for tractor services at an affordable rate and be able to work in the fragmented regions in the continent.
Quite interesting. But what would you say are, some of the bottlenecks, in promoting agricultural mechanization in much of rural Africa?
So financing plays a big role in lack of mechanization in Africa, right? Tractors are quite expensive in the continent, and that already creates a bigger problem in it as well. And then you have to factor in like majority of the farmers we have in Africa are women, because culturally most of the time the men would leave to go get jobs in the urban areas, and the women are left to sort of find ways to increase, to work in the farms and and get food, right? So those some of the challenges we as Hello Tractor come across as we're trying to create, bringing the platform in rural areas in Africa. And as I mentioned before, connectivity also is an issue. Not all farmers have access to smartphones, right? So you find that already sort of creates a barrier in itself.
All right, but what would you say, needs to be done to accelerate the adoption of, agricultural mechanization, on the continent, and how can startups actually, support this process?
So the communication or information, spreading of information is key, right? A lot of these smallholder farmers need information in terms of understanding how the agricultural seasons work, understanding how they can be able to get access to mechanization services. And financing is also an issue that needs to be worked on as well. We're looking at financial institutions being able to create programs or create projects that can make financing accessible to smallholder farmers. Currently, as Hello Tractor, that is something that we are currently working on. We have a pay-as-you-go financing project that is meant to provide accessible financing to interested agripreneurs and farmers across the continent, right? And then in partnerships as well, and partnerships in terms of farmer organizations across Africa can also chip in and be able to support the farmers in terms of implements and fertilizers and seeds and mechanization services as well. So we're looking at having a partnerships with financial institutions and with farm organizations to be able to link up those farmers who are interested in owning tractors, right, through the financing project, and farm organizations being able to link the new tractor owners with the farm organizations that they work with. And in this way, we are creating a system whereby each and every smallholder farmer in Africa is able to access tractor services, affordable tractor services, under one platform.
Quite interesting. Well, we need farmers supported even more than before right now, with the concerns of global food security. Thank you so much, Rispa Meliza, Digital Sales Partnership Lead, Hello Tractor. It's great having you on the program.
Thank you so much. Thank you for having me. Thank you.
All right. So the World Bank announced approval of a $350 million loan to support Morocco, so launching a Blue Economy program. The Blue Economy program aims to create more economic growth and employment while improving the sustainability and resilience of natural resources and food security. The program comprises two parts, one of which helps to form coordinated institutional frameworks, and other focuses on investment in key blue sector activities bordered by the Mediterranean Sea and the Atlantic Ocean. Morocco boasts the strong potential to develop a blue economy. And Egypt will list 10 of its largest state-owned and military-owned companies on the stock exchange by the end of the year, and several other assets will be sold over the next 4 years in order to attract foreign investors and also alleviate the current economic hardships. Egyptian Prime Minister described the current crisis as the worst in a century. Ukraine war repercussions have put a heavy burden on the finances of Egypt. Expect £130 billion of immediate impacts, as well as £335 billion of indirect effects as a result of increased prices for commodities like wheat, oil, and even interest rates. And salaries and wages paid to public servants shot up by about 34.17 billion shillings over the past year, despite a 3-year freeze on hiring of new civil servants, in a bid to tame the ballooning public wage bill. National Treasury data shows public servant salaries and wages hit 386.38 billion shillings in the 9 months to March, which is a 9.7% increase from the 352 billion shillings in March last year. The holes in priority areas. Rise was the first in 3 years, at a time annual inflation has been ranging between 5% and 6% each year, pushing up the cost of goods and eroding the purchasing power of households. And that's it on Business Incorporated. Thank you so much for watching. Catch you again tomorrow. I'm Ladi Williams. Bye for now.